Main points are that liquidity is at the moment very volatile. There's still about 60 billion of CLO liquidity and some banking liquidity as well. But both the banking liquidity is going down and certainly the CLO liquidity is rapidly going down. So we're currently at around 60 billion. Next year that will be the half of that, and in 2015 it will actually be only around 8 billion left. So at the moment it's still there, but also at the moment it's extremely volatile. Certainly CLO liquidity, of course banking liquidity is there and more stable, but certainly CLO liquidity is extremely volatile and very dependent on repayments that CLOs receive and new investment opportunities. So in the current market, if you want to do an underwrite, you really need to time it very well and catch that window of liquidity that's sometimes there and sometimes isn't.
Does it mean that in 2 years we might not have this liquidity once this money disappears?
Well, certainly the CLO money will quite rapidly disappear, but I'm quite hopeful that there will be alternative sources. For instance, high yield bonds could be an alternative source for financing, and high yield has already been very active in the first quarter of last year. Hopefully that will continue, although high yield money of course is also extremely volatile, potentially even more so than CLO money. And hopefully there will be alternative funding through sovereign wealth funds, pension funds, as we've discussed. I think as long as we structure our deals correctly with the right risk return parameters, then there will always be liquidity around for this type of asset.
Are we seeing these players coming into our market now?
Well, I have to be fair that in our market we're not seeing the evidence yet, but it makes perfect sense, and we hear that there's discussions going on as to how that can be structured, etc. So I'm hopeful, but at this moment we don't see the evidence yet, has to be said.
And what's the liquidity? I know that we talked a lot in the panel regarding liquidity for the smaller deals and the larger deals. How about the really mid-cap deals between 100 million and 250?
Yeah, I have this from market chats because we don't play in that area at all. We are active only in the markets, I would say 200 million debt and upwards, so above the 250 million in essence. The smaller end market below 100 million is very much driven by club deals done by local banks where the pricing is relatively low and conditions are relatively weak. I think anything between 100 and 250 million is really quite difficult because there isn't sufficient banking liquidity, and also the CLO market cannot be tapped. And anything above 250 million, it's more of an international, broader market and more liquidity that you can tap. So I think certainly deals between 100 and 250 million are really quite tricky at this point in time.